Hi everyone, welcome back to my channel. In today's video, we're going to dive into how you can maximize on your home equity in today's market, particularly with the high interest rates. Some of the advantages that you can go through with this and some of the opportunities that are out there for you homeowners who have a significant amount of home equity, and some of you who just purchased a property and trying to understand how does this home equity thing work, and you're just trying to have a good understanding to plan yourself down the line as well. First, before we get into it, for those who are new here, my name is Clement. I'm a real estate broker here in the greater Toronto area, and in this channel we get to talk about everything to do with real estate. So for you to stay up to date, hit the like button and subscribe to the channel. So let's dive into it. So I just want to break this down into very simplistic form. So when you hear about home equity, a lot of times there's all these words that are being thrown out there in real estate, and this is one of them, and we don't really have a good grasp, or you might not really understand what it is. To really make it very simple, home equity is the difference of how much you currently owe on the property and how much your property is currently valued at. So let's say, for example, and you checked your mortgage and you currently owe $200,000 on your mortgage, and this is a property that you purchased some time back and you maybe purchased for $500,000. Currently today you only owe $200,000 on this property. Now when we look at the value of this property that you own today, and let's say for example this property is now worth $800,000, so that difference of $200,000 and the difference of $800,000, so that's a $600,000 difference. So that is $600,000 is your home equity that you have today. So that $600,000 is what we are really going to be covering today, and what are some of the things that you can do with this home equity. Now for some of you, that $600,000 could look like $200,000, or it could look like maybe $400,000. I know some who that $600,000 looks like $1 million as home equity, and you're just sitting on it and you're not really confident, you're not really sure because of everything that's going on today. You're just saying like, oh, let me not do anything, let me just wait on what's happening and see what can be done. So I'm going to show you some of these advantages, some of these options that you might have with this home equity that you're carrying currently, and see what those options are for you. So the first thing I want to actually talk about is to determine what your home equity is today. What's the best way to do this? You could either hire an appraisal, you can get a real estate agent. Now here's where I plug myself in. I typically do a comparable market analysis for anybody that sends me their address, because sometimes people send me their address and email and just ask me to do hey Clement, what's the value of my house? And once I receive this email, I do what we call a virtual market analysis, and I send it to you. And from there, you actually get to see what's going on. Obviously, I've not stepped foot in your house just yet, but it's a virtual market analysis, which gives you a good idea of what value your house is, or what value your home really is at that point. So that typically helps. Then obviously when I come in and I walk in, I do a quick walkthrough of your property, I'll give you a really good understanding of what value of the value of your home at that point, what it is. So once you have the understanding of how much your home is valued at, now we'll look at how much do you currently owe on your mortgage. So obviously you're paying a mortgage on a monthly basis, bi-weekly, however you're paying it. So you really should know what you owe today. There's always a statement that is always provided. If you don't have that, you can always just do a quick calculation. How much was the down payment you paid when you purchased the property? How much was it valued at that time? And how much have you been paying from the period of when you bought it to today? And that way you'll be able to get how much you currently owe. And obviously in there's interest rates that are going in there, so some of the payments that you're paying towards principal and some of the payments you're making towards interest. So you have to have a really good understanding of this too, so that it can help you dictate on what you want to do moving forward as well. So another thing I want to also mention is, why is home equity important, particularly in a high interest rate market like this? Because the advantage that you might have, particularly let's say if you have kids, you can help your kids on purchasing a property or putting a down payment for their first property, and I'll explain to you how to do this. Or you could be going through an issue at home and you feel like income has not been coming in, or there's not enough income coming into the home. This is also a huge advantage for you that you can take on. If you want to take advantage of the market, given that the high interest rates are there, which means the purchase price are very low in today's market, and you want to take advantage of this and you have really good equity in your property, you can take some funds off your property, off this equity, and you'll be able to purchase a really good property at a low price point. So these are some of the advantages that you have on taking advantage of the home equity that you could potentially have on your property or in your property. Before we get into the grit of the video, I also want to mention this right here, which is very important. Some of the strategies to maximize on your home equity. And this sounds very obvious, guys, and this is paying down your mortgage faster. What are some of the ways to do this? 1, making extra payments. 2, you can do bi-weekly payments. And also when you're purchasing a property, obviously a bigger down payment typically also helps on your home equity down the line as well. Another big thing about home equity, this is another bonus point really, is by renovations. The kind of renovations that you do, a lot of times where homeowners get mixed up here is by doing renovations that are only, yes, it's your home, but if you have the mindset that you're potentially going to be selling this is not your forever home. When you're doing any sorts of renovations, you don't want to do renovations that are just very well suited just for you, because when it's time to sell and you've done this renovation that's only good for you and just your family, it's going to cut off a lot of buyers in the market. So you want to look at what's trending in the market. You really want to understand what's trending, and when you're doing your renovations, you're doing renovations that would actually be very suited to the general public. That way you have a bigger pool of buyers as opposed to just a small pool of buyers who understand the kind of renovations that you did. So you just want to attract a bigger pool, and once you have a bigger pool of buyers that would potentially buy your property because of the renovations that you did, that's just going to expand you and give you an extra 50, 100 grand, which is not the worst thing, let's be honest, right? The curb appeal also helps, like getting the good landscape. When an appraiser is coming in to look at the value of your property, all these things play a huge factor. Don't just leave your house the way it would be on a typical day. Obviously, hopefully it's always good on a typical day, but if it's really not, just be honest with yourself. Make sure it looks really good. When you know an appraiser is coming into your property to really give a value to your house, make sure it looks good. Make sure it has that curb appeal. When somebody walks in, they're like, okay, I see this house is valued at this. I can give it an extra amount. So that's a really huge positive for you as well. So I'm going to talk about 3 main ways on how to unlock your home equity. The first one is home equity loans. The second one, home equity line of credit. And the third one is cash out refinancing. So all these 3 options give you the ability to tap into your home equity line without having to sell your property. So now you might be asking, what's the best time to do this? A lot of times you want to tap into your home equity line is when you're trying to invest on other property. You really want to do this to add on to your real estate portfolio. When you have a real estate action plan and how to build on your real estate portfolio, using your home equity plays a huge factor on this. And I always prefer that is the best way to use it. You could get into a situation where you want to support your children to go to and purchase their first property, because it's not easy today for the average first-time home buyer to be able to afford a down payment. And this is one of the ways that you as a parent could potentially be able to help your child. And another one is to get a pre-construction unit. This is a very big way of doing it. I've always helped clients in this way to be able to help their kids who are still very young, and you buy a pre-construction unit which does not close immediately, so it's easy on you in terms of payments. And you just take this from your home equity and you get this pre-construction, and within the next 4 or 5 years you have this property ready to go. Your kids can move in there, they start making those payments, and it's easier for you, it's easier for them as well. That's another way to do it. Another one is obviously if you're having really hard times and you don't want to sell your property, you're maybe behind on some sort of payments. This is the benefit of being in the Greater Toronto area. The equity really expands and is really good because properties really appreciate very well. Obviously you have to buy the right property. You can take funds off of this and support yourself with this, but I always say in this case, let it be your last resort. And when you're doing it this way, you have to have a clear plan on how you're going to go about this. Don't just do it because you have the ability to do it. Have a very good plan with this as well. Another big one is if you want to do renovations to your property, which are going to add on to the appreciation of your property or add on into that equity that you could potentially have. For example, you need a basement to be complete, and this you completing this basement might cost you maybe around 10 to 15,000. But that 10 to 15,000, when in a year to 2 years time, once everything is complete, is going to add you an extra 80,000. An extra 100,000 just by completing this. Or if you want to make sure you have a good driveway, you want to create another separate entrance. So this is a part of the reasons on how you can go about this. Some of my clients have advised them when they're purchasing a property, they wanted to give up on a house because it did not have, let's say, a finished basement, or it did not have a separate entrance. And we approach it on a need per basis. Like, do you need this today? And they're like, not really. I'm like, okay, perfect. So what we can do, we move into this property, and in a year and a half time, when the property is appreciated, we take some equity out, and the property has a space to do this. And just like that, you have exactly what you want, and the property even appreciates even more for you to be able to give you a lot more to work with in that front. So those are some of the options that you could potentially have. The big one really is to do it, put an investment heart in there. The best way to do this, obviously, as well, is to sit down with a professional. Talk to a mortgage broker that you trust, or a real estate agent. Obviously, I hope that is me. I have a link down below this video where you can just schedule a quick 15-minute discovery call, and from there we just get to have a quick conversation on what you're looking for, what your needs are, and then from there we'll just build out of there and see what options you have. It's one of those conversations where something could come out of it good. If nothing comes out of it, I know the best thing that you'll get is you'll have a better understanding on how to move forward. So it's a win-win situation for yourself in terms of nothing has to happen, but you'll learn a lot from that conversation. But if you want to do that, just click on that link. I'll reach out to you. We'll schedule a time, or you can schedule a time directly, or send me an email and we'll get into it as well. But for now, that's it. If you have any questions or any comments on this, please put them down below. And until next time, thank you. Have a good one. Bye.